Joe, we are live. Good morning, traders and investors.
Hey, what's going on there, Brentster? How you doing there? Hey, I
Doing
love
good.
setup there, Stock Trader Network, and the national champions, Western Michigan. But here we are, folks. I was just thinking about what I was going to say, and I was going to say there are resilient markets and there are resilient markets. S&P's up 38 handles, 60.69 the quarter. The buck taking a hit, down 22 cents, 97.52. TLT leaking down 58 cents, 85.75. Crude, well, we'll find out what crude was doing last night. USO down a buck 12, 79.10. GLD down buck 73, 314.56 after making that new all-time high. SLV flat at 33, Bitcoin bouncing. That's up $1,745, just over 107,000. All right, folks, let's bring Triple D to the stage here and get things rocking and rolling on this Monday morning.
Oh, wow. What a weekend. Not so great for me, but the market's resilient as well. Two reasons not so great for me. Number one, the Oilers lost, so that's never good. So Tuesday, do or die. And then I have Sarepta in my long-term portfolio, and I was like, wow, that is not a pretty thing to, wake up in the morning to. I knew last night it was going to be ugly, and holy is it ever. We'll get to that news in a second here too. But the news of the weekend's obviously the war. I mean, we're all looking at videos. It looks scary. People calling for Black Monday, like all over on Saturday and even early Sunday. They're like, the markets are going to crash on Monday morning. And then we open, Joel, in the S&P, and we do open down, but it wasn't nearly as much as, a lot of people feared. We were down about 0.5% at the worst. And then we just started climbing a wall of worry. And here we are this morning, the market having a substantial rally in the face of a lot of escalation, really, I felt over there. Oil, which was up substantially Sunday night, and if you want to look at that too, Joe, because we talk it all in the same context, we can look at oil futures, are starting to leak a bit. So oil futures definitely popped. And then we're leaking here now. And if you look at the USO has indeed gone red here. So we were way up on oil, and now we're leaking that too. So kind of the opposite to what a lot of people think. I mean, this has been this market. What you think logically, it sometimes does the exact opposite, with S&P futures rallying substantially, and then obviously oil now starting to sell off, and a lot of oil stocks trading down. But Sunday night was crazy. Like, there was a lot of movement, a lot of stocks, a lot of oil stocks trading significantly higher. Obviously giving back a lot of those gains, and some of them now trading to the red. I mean, Joel, you watching these videos, like, what are your thoughts? Like, just first
Well,
overall thoughts.
it's day four. No truce in sight. So that's the bad news. Seems to be escalation on both sides. Lives lost on both sides, which is a
Yeah,
terrible thing.
terrible.
Yep. But right now there's no end in sight, and hopefully there'll be some way to get these two countries to the table. I know Trump was trying to intervene and talking to Putin and stuff. So right now, to put a bow on it, day four. And no truce in sight. So it hasn't spread to other countries, haven't been involved as of yet. U.S. Has had some limited involvement, so it's
That's the
unfortunate.
worry, is that does it spread? Like, does the US, eventually get involved here? And then we have other countries getting involved, and then it gets a mess. I mean, that's what they don't want to see. And maybe that's why the market is trading higher, because US has had, really no involvement here whatsoever, obviously supplying weapons, but no direct involvement here. And I think the market is hopeful that that's going to remain the case here. Like, de-escalation is what everybody wants. And, you hope that that's going to be the case. Go to the war stocks first, because they all ripped on Friday, and I'm telling you, man, like, just killer moves. Like, you maybe start with Lockheed Martin, because 3 days ago the stock was $443. Last night it was trading up at $495, $496. Has given it back, barely up here this morning, but I mean, you look at the gain from Friday, the stock was up 25 points. So it was a really big gain on Friday, obviously on the escalation of tensions in the Middle East. Joel, just technical thoughts here on Lockheed Martin.
I mean,
It lost a contract that killed the stock. It was back on the war.
well, it's only traded up $1.15 right now. So I think when you look at this, Lockheed Martin had a nice day on Friday. Actually, a nice day on Thursday and a nice day on Friday. I'm not. I'm just gonna focus in on. I don't even know. The pre-market high is way up there to see if they got that print in. Yeah, they got a 4 a.m. print here at 493.55. And Dennis, one guess only. Super easy question to start the week. The high of the day is 493.55. What do you think the opening print of that bracket was?
493.55.
There you go. See, I do you a layup here.
Am I right?
And we'll look at the top of
There you go.
yesterday's range. Wait, listen, we're not even at Friday's high, folks. Come on, 488.30. We'll keep this real simple on the technical analysis. 488.30, that's your first target. You trade through that. Also, that coincides with the high back at 490. There's an area, 488 to 490. Let's see if the Bulls can get a bid there. Looking for support, look at that close at 86.45.
General Dynamics, NOC, RTX, we'll just cover them all together. They all had big moves on Friday. NOC probably the biggest move. Is trading higher here as well. Was trading higher at 4 a.m., especially on Robinhood last night. Now you're starting to see, the leak here too. And as oil comes down, these start to come down too. So, I mean, I don't know. Like the market's trying to tell us, it feels like there's going to be de-escalation here. Or otherwise, these stocks wouldn't be giving their gains back. Oil wouldn't be giving its gains back. And I guess that, that's a good thing for people and everything. Just surprising that it doesn't look like that to me, but maybe the market's seeing something that we're not. Just jump into technicals just quickly. If you see anything that strikes your fancy, Joel, on NOC,
I mean, this
RTX.
is your best in breed here, it looks like. Your Northrop Grumman, right? Had the big earnings gap, 526.45. That feels, I'm saying it's earnings, but that could be back in April. But there's a nice gap fill here. I'm sure a lot of people will be looking for that. And the top of yesterday's range, 519.43. So a little bit of a gap fill after that. But this stock has challenged 550 a few times over the last few years. It's back up to that area. So, like I say, we talk about best in breed and worst in breed. Well, there you go. RTX. I mean,
this traded up to 152 last night. I saw like on like IB after hours. That felt overdone too. It's now given all that back as well. So I mean, it was a sell the rip opportunity. It looks like Sunday night and to Monday morning, to earlier this morning.
Wow, 152, huh? That is unbelievable. A little bit of a smaller stock that fits in this category. It was a focus on our show on Friday, NUKK. That's with the Iron Dome. Iron Dome's been holding up pretty well. I mean, with the amount of missiles that were sent and everything, you can't get everything that was sent towards the civilian targets in Israel. That's traded up 71 cents at 14.70. This stock, they're that, and I believe Lockheed Martins are the ones that are more behind the Iron Dome. And I don't know, an Iron Dome for the United States is probably going to cost about $87 trillion and 42 cents. So, and the feasibility and the implementation of that, I don't know. We'll have to see. But first things first, it's up 71 cents. This caught a wild bid during the pre-market prep show on Friday. I don't know if someone just hit the wrong button or whatever, but this got crazy. It was live. We got to 18.20.
It went nuts.
Yeah, but just
Money Mitch was
settling
trading
in
it
here.
live too, and he had a great call. He was long the thing, and the thing just
Yeah, 17.28. That's your big number, folks. That was the high in the regular session. And then you know what? I kind of like 14 because going back for the month of June, there's been multiple closes over 14 though. So once you have a stock, sets a base at 12. Are buyers willing to step at 14, 14 and a quarter, 14 and a half? It's going to take a couple days to get through that.
Yeah. I was along a few of these names last night. I've sold them in the pre-market. I sold some last night too, just because it felt like the pops. This was trading 15 last night, which felt a little bit overdone. Also, like I was saying, General Dynamics was trading up to $8 or $9 last night. That felt overdone too. I've just seen this play out before. Like they buy these stocks, they rip them higher, they rip them on the 2-day move, they're all escalating, and then you start to see the leak. And as soon as oil starts to leak, you start to think these start to leak too. So I think if you're coming in these things now, it's difficult. Keep an eye on oil. And as oil is coming down, because oil is always your leader in times of war. See USO trading lower, you think, well, I'm not going to chase these names up $4 or $5 here right now because oil's coming down. And that's your indicator for your war trade right now. I mean, if oil starts to blast off again, then these stocks start to lift too. So I think right now I'm trading all the defense stocks like Lockheed Martin. And AVAV is another one, drone stock, obviously. I was long this one. I sold this one just earlier this morning. It's trading up 1.78% here right now, but same story. I mean, and I'm long this in my long-term account too, but I had extra on for trades over the weekend here because I thought that there could be escalation, and there was. So I think it's ring the register time for a lot of these names. Just my opinion.
Dennis, before we go into all the individual drone stocks, why do you think that in those overnight sessions, why do you think things get so much out of whack?
Well, it's just no liquidity. So there's just no markets. Like the markets are much wider. There's people who are excited that don't respect arbitrage. So especially even at 4 in the morning, I've always talked about like 4 in the morning. The markets are thin. There's not, the market makers, a lot of them aren't online yet. There is a couple that are online, but, and I know obviously we have market makers in Robinhood and IBKR, but they're wider. It's not a lot of competition. So the stocks are just thinner. And when they're thinner, somebody wants to get in, will really move price. Like a few hundred shares can move price a couple of dollars. You don't have that in the regular session. You don't have it. You have it a little bit in the pre-market, but as you start to get closer and closer to the open, liquidity continues to increase. So if I was to chart liquidity, it's at bare bones, 4 in the morning or in the midnight sessions on Robinhood, and then slowly starts to climb as we get closer and closer to the open. Then we get to the open, liquidity increases substantially. So what I mean by liquidity is how thick the stocks are. So like 300-400 shares of Lockheed Martin, at 10 o'clock in the morning isn't going to move the price much. 300-400 shares Lockheed Martin at midnight on Robinhood is going to move the price a lot. So that's the difference. It's all just liquidity, Joel, and it's also traders who are honestly uninformed. I know there's lots of informed traders on Robinhood, but there's a lot of uninformed ones as well. And what that means is just traders who aren't respecting simple arbitrage mechanics. I mean, when you've got ConocoPhillips, trading up 4% last night or 5%, and you got XLE up 1%, that doesn't make any sense at all. So, I mean, there is some opportunities for traders who obviously, know what they're doing. But there's also, you got to be careful. Like if you're trading on these things, don't just blindly chase stocks saying, oh, ConocoPhillips up 4% is probably going up 10% tomorrow. Well, it's probably not. This is the third biggest oil company in the world. It's pretty thick. It's probably going to be close to what the XLE is doing. It's a major component of the XLE. Like ExxonMobil, same story, trading up over 114 last night, gives it all back. So, and then just, classic sell the rip stuff, right, Joel? Like, I mean, this is just a market where sell the rip has been working as well. We've talked about the contrarian view of 2025, buying dips and selling rips. That's how I'm approaching it, and that's why I'm making money.
Just a quick education teaching moment here. I know that a lot of people here do not participate in the pre-market or after hours action, which is fine. 2 things of note. Just note the activity. Number one, if you're thinking of getting involved in trading and doing these kind of things, which is taking Dennis several years, if not a decade, to master, observe it for a while. Secondly, it's probably a good idea to start exiting trades in those after-hour markets than entering trades. If you notice what Dennis is talking about with a lot of these trades here, there are trades that he picked up during liquidity, during the close, during a little bit of the after hours. So he's using the illiquidity moments to exit trades. I don't think I've heard you mention one initiation. I mean, I've heard you initiate when things are so far out of whack. But just important, see if you can get a good exit on something.
No, and I think I do both. I do initiate trades as well. I did short some ConocoPhillips up at $100 last night. But I think to your point, Joel, the main thing I don't do after hours, it's more contrarian trading, where okay, this is stupid, this is overbought, this is probably, not going to open this high on Monday morning. Like when you got ConocoPhillips trading up $4, it's like, okay, I know, but I mean, XLE and USO are barely up. I mean, ConocoPhillips trading up 4 points, maybe a little bit overdone. So I think I'm more of a fader. And my natural day trading and overnight trading is mostly contrarian. I would say, I definitely do some Momo stuff. I get on board with Tesla, and it's like going. And I was like, okay. And I was long Tesla overnight, which was a full Momo trade. I was just like, it had a really good day on Friday, the bounce back. And I was like, I thought there'd be follow through on Sunday night, and there definitely was. And I already got out rewarded for it. So I do some Momo as well, but a lot of it's contrarian. And I mean, this is, the thing. There's two core strategies. Like, throw everything out the window. Let's do education for like 1 minute here. There's two basic core strategies that overlook all of market strategies: momentum trading and contrarian trading. Momentum trading is stocks going up, I'm going with the momentum. It's stocks that are high go higher. Contrarian trading is the opposite. They're taking the opposite side all the time, where, okay, this is way too much. I'm going to short this stock because it's going up too much. Or the stock's going straight down, like this is way overdone, and you're going to buy this. So basically, contrarian and momentum traders trade with each other all the time. Their time scales are different. A market making strategy is almost always contrarian, where they're providing liquidity. People want to get in, they're shorting it to them. People want to, get out, they're buying it from them. So, I mean, that's really, at the markets at a core. It's contrarians and momentum. And then you have obviously the arbitrage mechanics, and you have all the other stuff that keeps the markets in line. But really, from directional betting, it's contrarian and momentum strategies that dominate everything. So I would say I'm like probably 80% contrarian, probably 20%. And I've never done the math on it, I'm just ballparking it. But I feel like I do a lot more contrarian stuff than I do momentum stuff, where I'm like, okay, this is stupid. I'm going to, fade this because it's not working. And then there's just certain years, like 2020 was a momentum year. And I was doing all Momo stuff because that's what was working. The stock that goes up 5 goes up 10. This has not been that year. 2020 was a full Momo year. 2025 has been the year of the contrarian. It was the acronym when I started the year with fade trade. That at its whole is contrarian strategy. Fading is contrarian. So what does that mean? It means like the stock that goes up 5-7% then sometimes gives it back. There's going to be exceptions, and we can talk about those exceptions today. Oracle would be one of them and has been building. But a lot of times, even these earnings, you've seen, the big initial rip and then the dip. Or, the opposite in some cases, like Restoration Hardware was all over the place. Contrarian Dream goes down, up, down, all over the place. So I think just understanding the market environment that you're in is, the first recipe for starting to be more successful. April, May, momentum was running because we were running straight up. But really, in the last month, since like the middle of May, we've kind of gone nowhere in the S&P. We've kind of drifted up a little bit on the Qs, but really nowhere. Contrarians are winning again. So just understanding that helps you to be on the right side of the trade.
Okay, just to finish up the war, the defense stocks and everything. We talk about drones a lot, and drone stocks and drone companies and the sector and stuff. And I think it's Brett. Can you help us differentiate here a little bit?
Yeah, so Joel just asked me for a list of drone stocks, and I go to my handy dandy watch list that I made for drone names, and I pull up AVAV, I pull up RCAT, I see ONDS, Joby, JOBY, also getting kind of tagged in with the drone play. And Dennis makes a really good point. He says some of those drone stocks are not war stocks. And that's an excellent point, folks, because theme dominates. Sector doesn't mean correlation. Because these stocks are in the quote drone sector in some way or another doesn't mean that they're going to trade together. And so, Dennis, kind of the only one that you're really leaning on out of those four that I mentioned, AVAV, RCAT, ONDS, and Joby, you're saying AVAV is kind of the only one that I really like for this war trade.
I mean, there's a couple. RCAT has some military applications in there too, so I would probably tie that in there as well. But AVAV is a full war drone stock. Like that's what they do. They have, and you can watch the videos. They're war drones. So I mean,
And
AVAV is a war stock. Like I have it
and
in there
Israel
with
based too.
Pardon me?
And
Yeah,
Israel based too,
yeah.
right? So especially.
So I have it totally classified in the war category. Like when I trade and I rate my war stocks down, it's Lockheed Martin, NOC, General Dynamics, RTX, and I have AVAV right where they're with them. They trade together. So
Yep.
as war stock. So it's a surprising actually AVAV didn't get much of a pop on Friday. It did lift overnight here, but you also have had a lot. The charts look a little bit different here on AVAV too, because I haven't been war times, but when war times come, those stocks start to trade together for sure. I mean, but you can go into like Archer Aviation, and say, okay, well, or maybe that's a bad example, but Joby, it's not so, these aren't like war drones. So
Right. Right. Right.
it's different. So I
And
mean, not a
people.
drone is not a drone.
Yep. And people always when we point out Joby as like a drone name, people always point out this is air taxi, and I don't disagree. However, they do get clumped into the drone theme. So again, theme dominates here, not necessarily sector, just something interesting to point out there.
Yeah, because when you go, like you said, and bring up drone stocks, Joby's right there. You're like, oh, here we go. But this is an air taxi service. This is definitely not a war stock. Where AVAV is literally making drones to fight in the war. So direct application. So yeah. So just you can't just always take what. Great point, Brent. You can't just always take whatever your system's giving you as okay. This is the sector, and all these stocks are going to move together. So it is a good point. AVAV, I want to do technicals on this one, Joel. I do have it in my long-term portfolio. I had it overnight. I just sold it. I see major resistance up here at 200. I also see oil fading, which makes me want to, almost short the stock at this point from a trading perspective, but I still have it in my long-term portfolio.
What's interesting is that this stock hit its high of the move last week. What was it last week? It hit the high of the move a week ago Friday, and on Monday. So that was before. That's to me. That's really that it's interesting that move was 3 days ahead. So that's a big area. It has a 200 psychological. But I think if you really want this thing to blast off, I'm going to call it 202, 202 and a quarter, pair of highs, 201.70, 202.74. Never closed anywhere near that area. High close in the move on Friday. But that's a double top. So, I don't know if there was some anticipatory trading there. Also, if you go all the way back to the end of November, someone was trying to wiggle out above 200. So you got a zone there for AVA. I don't know if it's something to, dump your long-term holding, but man, when you get two highs in the same area before the actual event occurred, and then you go back and between November and December, you got 5, 6, 7 highs around the 200, 205 area. To me, that poses as major resistance.
The disaster of the day is going to be Sarepta, and it's a mess here. They had another death, and that's never good news, from the side effects. We've got lots of analyst commentary here, but this stock is down significantly. I did buy this in my long-term portfolio. I was up with it for a bit, and obviously getting hammered here now. Wow. I don't know what to say. Like down 35%. It's not a trade. I didn't have it on for a trade, but you're always disappointed. Obviously, we knew it had come down substantially on the first death, and now you get a second death from liver failure. And these are side effects. It's a terrible disease that they're trying to fight, and obviously, there's going to be a few bad outcomes as well. So stock now down 36%. There is analysts all over the place on this. Lots of downgrades, obviously. Some analysts still defending it. They've provided safety update here this morning. Obviously, Sarepta, has bounced slightly off of that, but it's still down substantially here. I mean, the stock has, went from $160 or $170 a year and a half ago down to $22 here now. Still a drug, still selling, but are they going to pull, the one drug? That's all to be determined here. Obviously, when you're getting deaths from side effects here, it's really bad for the company. HC Wainwright does downgrade it to sell. They put a price target of $10. They're the low. BMO downgrades to neutral. Piper downgrades to neutral. Some other companies are coming and defending it. Piper did lower their price target to $36. But this is, substantially bad news for this company.
Yeah. I mean, I'll just give you the pre-market low, 2030s, a pre-market low. You got almost a $3 bounce off that. So I think be using dips here as buying opportunities. I don't know about shorting this at 23 and banking on covering at 22, but it's a possible strategy. I don't know. So, Dennis, they have any? What else do they have in the pipeline? Do they? They got to have other things in the pipeline, right?
Well, this is just basically more of a one-trick pony, Joel. Sarepta always has been.
Yeah. Okay.
So this is an issue. They do have a couple of different drugs here, though. So yeah, this is a major issue. It's Martin Shkreli is a pick here as well. It's one of the main reasons I bought this, because he thought at $37, he had said on his podcast, I do listen to Martin because I said he knows a hell of a lot more than I do. He thought valuation was just ridiculously low here, and he thought it's a double. But I mean, when you get another death, there's going to be
What's he
serious
saying now?
repercussions here.
Is he
I
saying
don't know.
anything?
I don't know, Joel. I'm doing a podcast right now, so I can't type and tell you what Martin Shkreli is saying here now. It's new information. I'm sure it'll be interesting to listen to. I'll probably go get his commentary and see, what he says about this now. But you win some, you lose some, and this is what diversification is all about. Because some people, struggle with diversification, and they buy 5 stocks and they think they're diversified. If you get 20% of your wealth in Sarepta, you're doing something wrong, because it's a smaller biotech company. Obviously, they do have drugs. They have been, making positive cash flow and making money for a while. But when one of the drugs goes south and you only got 1 or 2 drugs, I mean, that's a major issue. You have a stock company like Pfizer, Merck, Lilly that are widely broad, that have, dozens of drugs out there. It's a different story. So this is, the downside of biotech. And I've been in biotech before. I've had huge winners in biotech. I've also had huge losers. This is not biotech stock investing is not for the faint of heart.
Okay, let's just talk about the beast of Wall Street here. Oracle is trading down 93 cents, just momentum off its report. Right now, I mean, that's a new all-time high that was made on Friday, new all-time closing high. So I think you got some good numbers there. Soft 215.22 right there. That whole area. See what the Bulls and the Bears do at 215.22, 216.60. If you start to fail in that area, maybe it's a sign of a top. But if you're just playing it from the safe side here and you're like, I'm never selling this until it gets to 250, then I'd maybe have a stop under 200. Yesterday's low, Friday's low, 201.20. So Oracle, just one hell of a move.
Well, this is momentum, and we say, obviously, it's been a contrarian environment, but this is one of your examples of if you can find the right momentum, man, there's some follow through moves. And this is like the double follow through move here. You get the big move and they're like, this is overdone, and bang, tax on another $16. So sometimes you got to wait till the momentum starts to subside. So you can't just blindly short rocket ships here either. I mean, stocks are making new all-time highs. I hate being short stocks that are making new all-time highs, because it's all blue skies above, and there's no pain, everybody's in it. So the only pain is the shorts, and then you get short covering here. It's saying, and people probably saying the Oracle move was overdone on Thursday, and then Friday tax on another 15 points. So they're big moves here.
Okay, so what do you need to do if you're a company, you're in the news? You need to get mentioned with Amazon, Roku, Amazon Ads, and Roku announce partnership, creating the longest authenticated CTV footprint. Roku in rocket ship mode here. My technical comments are the same people that were out there last week at 82 are out there at 82 as the pre-market high comes in at 82 and a quarter. And these pair of highs from last week, the 10th and 11th, just under 82.
I've never been a fan of Roku. I've called it TiVo Part 2 for a lot of years here now, correctly, because it was $400 or $500 a share when I started doing that, or $400 a share. It's gone nowhere really in the last 3 or 4 years. Yes, there is some value here. This is a company that, does make money. And I sometimes get exercises to go, let's see where the valuation is. So Roku is trading at currently, okay, well, it's not making money. It was at one time. But price to sales is only 2 times here. I'm trying to just look. Yeah, $10 billion company. So I must have went back to the red, not making money now. But at one time they were making money. I mean, I don't know. This is just there's so much competition in this space, the streaming space. They tried Roku TV. I don't know if anybody watches that, their own little streaming stuff, because they're trying to get their own content on there to try to compete. But I mean, people use this for older TVs, but now they're all built into the TVs. Yes, some of those Rokus are built into your TVs, but there's other competing services with this as well. So I don't know. I think Roku is just a no touch for me. You're going to get pops on stocks like this, but I don't think this is like, the big moving the wheel. Think about how good streaming has been. Think about how big the moves Netflix has had. And you think about like Roku really has sat here and done nothing. So, I mean, that's telling you that this is like not the place to invest for streaming. I think there's way better places to go.
Yeah, obviously, Netflix falls into that category. I know the Sarepta news was bad, but Dennis, I think the XBI. I don't know if you laid off the XBI and IBB this weekend, but we do have some good news in a biotech stock. That would be Insight Corp, trading up 6 sticks here. If I try to pronounce this stuff, well, let's see. I'll try it. Insight's experimental therapy shows platelet normalization and safety in rare blood cancer trials across doses. Well, that's a lot easier than the other headline I see. So, bottom line, good news. Popped over $75. Pre-market high 75.46. Right away, I look at this. I look at February and March. I'm like, where did this thing peak in February? Peaked at 76.96. Where did it peak at the end of February? 76.24. So these biotech stocks, when they can get going, they get up to the resistance. But INCY having a nice move this morning.
Yeah, nice move. Sometimes there's follow through, sometimes there's not. I kind of feel like this is going to be in the more not category, so I'm not chasing this one this morning. We do have a first-time guest in the background here, and he's well known in social media. And let's go to him right now. Waiting for the intro. Oh, I think Brent's computer froze. Okay, that's fine. We won't have an intro here. Brent has
we do.
frozen up, unfortunately.
Wait a second.
He's froze. I'm telling you, he froze.
Well, that doesn't.
So we get no intro from Matt, but we're just going to bring him in on the fly here.
We do. We always have an intro. Here we go.
Brent was... Joel's got the background. At Kohrs, how's it going?
Oh, it's going. I'm ready for this week. It looks like it's already gearing up to be a pretty crazy one. Obviously, FOMC, potential world war, trade war, shortened trading week, you name it, this week has it.
So I've been talking with you for years on Twitter, and I've been talking about having you on the show at some point in time. I'm like, I got to get Matt on here because, he's obviously, and then I think about like GameStop, and this is really, was your, like back in 2020, you were covering this so well, and I was following you closely on Twitter because you were covering this story very, very well. And every time GameStop pops up in a filter, I think about Matt here. So, let's just go back and, because, maybe not everybody's familiar with you, although I think a lot of people are. Just give your story on how you got involved, so much social media covering GameStop. Give your background for us here, for people who maybe don't know you, Matt.
Yeah, I'll definitely try to shorten it up a little bit. But basically, I started trading early. Grandfather taught me about it. But when you're younger, you don't really have any money. So I think my first trade ever was maybe sophomore, junior year of high school. Penny stock. I was convinced that this random company, I think, was redoing the internet infrastructure in Pakistan. I think that was like my amazing trade thesis. And of course, it was a penny stock. So it very quickly went to zero. Fast forward to college, once again, broke college kid, but still like very, very interested in it. So I ended up starting trading futures because I didn't even know what they were. It was a free data set. I had to pay for equities. I had to pay for options, but I was like, oh, okay, this is free. And I was studying computer science. So my idea was like, oh, I'll make algorithms that trade for me. Fell in love with that, kept trading. Fast forward to leaving college and got my first job as a computer scientist. And at that point, took it a little bit more seriously. And then from there, I was like, you know what I should do? Was working on my master's in statistics, very much wanted to be a quant at Citadel. Program got put on pause because of the pandemic. I was here in New York. And I figured at that point, this was right in the beginning of 2020. I was like, you know what? Why have a couple weeks, a couple months off? might as well try to teach the world on YouTube about algorithmic trading. And I was horrible at it. If like for anyone who wants to be an aspiring content creator, go to my earliest videos and you'll magically feel better about your life. It was god awful. And that took about 10 months. And fast forward early 2021, that's when actually I had some friends who were basically bullying me. They're like, dude, it's bad. Like, you're not talking normally. You sound robotic. No one's going to ever watch this. So December 31st of 2021 was my first stream ever. And it was only exclusively to try to get better at speaking live. And I just was doing that every single weekend as like a market recap, that type of a deal. And I remember late January, I was following GameStop and Wall Street bets and all that. And I was like, you know what? I might as well try streaming this. I've been working on streaming ever. And I think I went from like maybe 20 or 30 concurrent viewers to 1,000. And I don't know if I'll ever be getting that dopamine hit again in my life. Like that was it. I was like, I've figured out content. This is what I meant to do. So then I just started studying that. So it was a huge pivot from like algorithmic, systematic trading type of content and attempting to teach it to more of the full-fledged high octane GameStop, which became Doge and then AMC. And what's kind of weird, it's a full circle moment because right now it's a lot more back to like the bread and butter, like let's get heavy into the math of it. Yes, but at one point in time when you and I first got connected, it was the crazy insanity of GameStop, AMC. And in a weird way, I look back on it and like just the cool things to learn. I would have never in my own trading career ever cared about like market structure and this and that and like really getting into the weeds of it. So definitely a huge learning moment, not just on the market side, but obviously also on the social media side.
Talk about that AMC those days there too, because that stock went absolutely berserk. I can remember one morning, like it was $5 and the next morning it opened at 20. And I was saying to myself, like, how is this possible? I'd been in the markets for 21 years. And I'm like, we saw GameStop blast off because it was a little bit lower float then, but AMC actually had a pretty substantial float. And it's just like this spread like, wildfire just everywhere.
Yes.
Through all these social media stocks. And then the whole short squeeze thing started where we're going to, go to everything that has a higher short interest and go through. I mean, talk a little bit about, that short squeeze, like, that we're going to squeeze the shorts. And this is what was being talked about on social media. And all these stocks just kind of started to trade together, these short squeeze stocks, and they were going berserk.
Oh, it just shows like the immense power of that, like just the community mindset when you have so many people. Because I mean, not that it was the best of times, obviously, but back then people were locked inside. We weren't doing anything. They were looking for a community we couldn't do outside, so it had to be digital based. You're getting stimulus checks, unlimited quantitative easing. It was the perfect, like, just storm for that to happen. And then also just this sentiment of like, hey, let's take out the hedge funds, let's take out the hedgies. Like, somehow we hear people are making money, can we get a piece of it? So like there were so many factors that all came into play. And like you said, all of a sudden I think one day AMC ran like 96% in one day, topping out in the 70s. GameStop, when you had Elon Musk, like what did he tweet? Game stonk one night, that goes. And then the craziness with Robinhood and stopping people from buying. Like there was just so many perfect things. And it shows you when all of a sudden you have, I believe at that point, GameStop and AMC, maybe at one point they were both trading $30 or $40 billion in market cap is like what they peaked out at. And that's one wild thing of where I see not only retail education, but even media covering it, of massive differences between what is an investment and what is an active trade. And all of a sudden I saw that getting mixed quite a bit just because it's up now this 1 week with the story. People thought that meant it was a good long-term investment or vice versa. If I was talking to media sources, they're like, well, why would you be in this? It's like value too high. I was like, well, it's not an investment for me. It's a trade. I plan on getting in and getting out and moving on with my life. So I find that there's a lot of confusion between those two because investing and trading, they play out in the same medium. But in my personal opinion, they're wildly different sports, and I don't think they should ever be conflated.
No, the problem is that you get newer traders and they don't want to take a loss. And they're like, okay, well, I'm up 10%. Now I'm down 20% just all of a sudden because the rug's been pulled on this thing. I was like, I'm just going to hold on to this because I know it'll come back eventually. I've been in the prop world and I've been, with retail traders a long time. And I see time and time again, traders just do not want to take a loss. So they'll make any excuse they can to avoid taking a loss. I mean, How do you change? So I'll just ask you, like, how do you change that natural human mindset? Because you go to behavioral finance called loss aversion. So it's embedded in us all. I mean, I've traded for 25 years. I still don't like taking losses either sometimes. Like, how do you like just get rid of that mindset and be able to take a loss, when your thesis doesn't play out?
What a phenomenal question. And I think if you could sell that solution in a pill, you wouldn't have to trade anymore. I could say that, but
I'd invest in that drug company.
One thing that really changed my mind on this whole game of winners versus losers, and it's so frustrating because in the retail space with all these gurus and gurus, they are selling a holy grail of a system of right 95% of the time. When we lose, it's barely a loss. And other than that, just money, money, money. And obviously, anyone who's been in this game for even a couple trades, they just know that's not the math of the market, not whatsoever. But the one thing that really like nailed it home for me is I look up to Jim Simons as one of the best traders, investors of all time, $100 billion in profits. And I was reading his book, and the one passage that sticks out to me, the guy who's made the most profits ever trading. Actually, here, a quiz for you. What do you think his hedge fund's hit rate was? How often do you think he was right at Renaissance Technologies?
I'm probably going to guess low because I know, like, for my own proprietary trading, if I'm right 55% of the time, I make a lot of money. So, I try to be right, like, just over. But, what was his hit rate?
50.75. So right, exactly what you're saying.
Dennis hates quizzes, Matt. I
kind of got that one, so I was a little bit high.
No, he had the answer to it. So I was looking at that. I was like, okay, so the guy who's done the best, that like just his like, I think it was a 60% net return over the life of his, like just every year. And he was only right just better than flipping a coin. So to me, the game all of a sudden being like, hang on, we don't need to somehow maximize me 90% of the time. It comes much more. That proves it that it's really just risk management. As long as you are, and it's the classic saying of get out of your losers quickly, ride your winners time and time again. But to see that that's how the best people have done it. And then you take a deeper dive into some of the best performing active trading hedge funds. And that's what they do. This is a game of over and over. Like one saying I like to say to my community is like, I'm always going to assume that my current trade is going to be a loss, but my next one's going to be the amazing one. And the whole point of that mindset is manage the first one and don't let yourself blow out because the next one might be like right around the corner. So like in every single trade, I'm like, no, it's a 50-50 shot. Like in short-term trading, so much of the math, it's indistinguishable from noise. It really is normally distributed. So it's always protect your downside and you just have to survive the marathon to get to that next trade.
So Matt, let's take it to the markets today. And we are in a completely different market environment than we obviously were 3 or 4 years ago. And now it's completely headline driven. It's like, what is Trump going to say next? I mean, if we ignore the worst stuff of the weekend, because the worst stuff's kind of taken over the headlines the last 3 or 4 days. But the last 3 months, it's been, everybody's just glued to what is Trump? Is there a deal? No deal? Tariff? No tariff? Violent moves in both directions here. I mean, like where we saw obviously April, the S&P selling off 15% in 3 days, then bouncing at, almost all back in one day on the day that we kicked the tariffs down the road. How are you approaching this headline driven market with your own trading?
Yes. In April, I'll be completely honest, there was a point where I just had to turn the systems off, where the VIX, it was getting about 40, 50. And like you said, like one little tweet. And the most frustrating thing is there was the one day on Monday where it was reported we might do something with China. And then the way I was like, no, that's fake news. Market came back down. And then it was reported to be real on Wednesday. So like, it's just, you can't predict it. So in a weird way, it comes back to the base thing where sometimes like it's just, once again, 50-50 shot, protect it. You better put your stop in because if it goes away from you, like in this environment, it can really go away from you. So obviously there's clear things such as size down, blah, 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 like things that are pretty evident. But one thing that maybe is like a slightly different answer, and then maybe you guys have or haven't talked about it. I've been getting quite a bit more into large options positioning, wanting to know where all the positive gamma is, negative gamma. I know recently in retail trading, the big Captain Condor guy, this guy's selling massive iron condors, seeing where that's positioned and obviously trying to discern how market makers react in those areas. So that's obviously with respect to just like the overall market. But then of course, I find that maybe in this environment, certain individual equities are actually easier to play. Right now, you were just before I came on talking about one of my favorites, Netflix. I was noticing the relative strength when the market was getting completely destroyed in April. Netflix only went to break break-even year to date. So paying attention to that relative strength and not getting as crazy moves, especially with the vol blowing out, making life a little bit easier.
Matt, traders, people, they have their routines, right? And to follow the markets, Dennis and I have been trading and investing together for a quarter century. So we've each developed our individual routines and news sources, and it's really evolved. Talk about like your go-to, like in the morning, like your go-to info or your go-to indicator. Like for me, like even in the middle of the night, I'm watching, 6 p.m. The market starts for me. My trading week starts Sunday at 6 p.m. Boom. I'm watching the futures overnight activity, and then obviously things go into place. Talk about your go-to indicators, which you use for information, and how it evolves.
Yes. Awesome. So similar to you, when the futures market opens, I'm getting alerts on my phone, especially this particular week, what's going on with oil. And we have like a lot of tension right now in the system. So I'll check out the futures market open. And from there, like even at the start of a day before I'm like the market really opens today, I'll look at larger time frame things, what's going on the weekly, what's going on with the daily and intraday trading. Of course, I'll go do a little bit of a smaller time frame. But like I said, when you get to too small of a time frame, I would argue that the math really does suggest it's indistinguishable from noise. So I like to look at the highs, the local highs, the local lows. Are we breaking out, breaking down? So I do all that basic technical analysis. And of course, a lot of people do their career of just pure technicals. For me, I really, over the past year or two, have been putting on top all the major options and the options positioning, I should say. And the reasoning for that is I would say technicals, you're always inherently looking in the past. Those are trades that have clearly already been executed. So I wanted some sort of other tools, such as options, that has some sort of future-looking component. Obviously, options expiring at some point in the future. I like to mix those two. So every single day, I'll not only look at the technicals, breakouts, breakdowns, consolidations, relative strength, relative weakness, for example, like Netflix relatively strong, Apple right now relatively weak, those types of things. But then from there, I keep my universe very small. And I think maybe for a new trader, when I first started, I was chasing anything that was moving.
Yeah.
My life has become far easier when there's like about 5 to 10-ish things that's what I know about. That's what I look into. I was very impressed when you guys knew all the stats of some of the biotech and the pharma plays. That's so far out of my universe. If I were quizzed on that, I would know absolutely nothing. So I like to just keep it very simple. I'll look at the technicals and the options for a small universe of things. And if nothing's going on in that universe, well, I try to stay a little bit off the charts, but we all know that that's easier said than done.
Is it like Meg 7, like your universe? I'm trying to dig into your universe here a little bit deeper because I think that's a great like approach to the markets. And like at Bright Trading, when I was at Bright Trading for 23 years, they used to teach that to the new traders when they would come in. They would like say, hey, look, Don Bright would come in and say, pick on 4 or 5 stocks, start to learn them, how they trade, how they react, learn those really well. And those could be like your children, the ones that you trade all the time and the ones that you make from. So it's a fantastic approach for long-term success. So I want to dive in and like, what are the Matt Kohrs stocks that he picks on?
I definitely do quite a bit with the overall market, just the S&P 500 and the NASDAQ. Once in a while, the Russell, just like a lot of times it's not moving, but when it gets moving, you can get good money on those Russell moves. Other than that, for the individual equities, it is very much Mag 7-esque with a couple of the extra, I guess, major tech plays. And yes, I do care about that. And that's where like my background is. So I feel a little bit more comfortable with when there is an announcement on AI. What does it mean? What does it not mean? That type of a deal. But also when I look at the biggest dollar volume trading in the options market, especially, it happens to also be those. So they're very deeply liquid products. And there's just more information that you can find out about them. So like I said, you guys are talking about the pharma stocks. If you get the move right, you can make a ton of money on it. Right. I just happen to have I don't have a bio background. I don't know when you guys were joking of like, I don't know if I know how to say these words right. I could read those reports and half of it's going to be in Greek to me. It is just by no way my bread and butter. So as you were alluding to, I just find where I'm comfortable and getting very good at that. I find that the market is a mechanism that pays for niche expertise rather than breadth of knowledge.
Awesome. Matt, thanks so much for giving us some time here today. Appreciate, actually being able to speak with you for the first time on air here. So Matt, we want to have you back real soon. I want to keep picking your brain because I can tell there's a lot of trading knowledge in here. So thanks so much for taking the time. We'll get you back on real soon.
I appreciate that. And obviously best of luck in the markets this week. It's gearing up to be a crazy one.
All right, quick
Thanks,
recap.
Matt.
Look at the markets here. S&P's up near the high, 60.77 and a quarter. That is actually a not quite a new high for the move. We did get to 75 and a half, I believe. Well, we're looking at different contracts now, folks. Oh, let me see if I can get my ESU up here. We have rolled. Oh, we haven't even. We'll go into this tomorrow. Quad Witch on Friday, Dennis. So we even got some more fun to talk about. Rolling into Quad Witch with everything going on. I kind of let that slip that mind. But we are now looking at the September contract, and the high in the September contract, it's a ways away. 61, wow, 61.2675. So we got some room to go on the upside. Dennis, I know one strategy you might not be using a lot this week, and that is the pre-earnings run strategy. This week and next week are devoid of earnings for the most part.
It's nothing on the. So I'll give you everything I got. Tuesday or tonight we get Lennar, so we do get a home builder. Tuesday with Jabil Circuit, JBL. That is not a huge name by any means. Wednesday we're going to get SWBI, Smith and Wesson. This is like we're reaching. Thursday we're closed because of Juneteenth, and then Friday we get a few stocks on Friday. We're going to get Accenture, we're going to get Darden Restaurants, we're going to get CarMax. I mean, there is no headliner here whatsoever. So probably the biggest name is maybe Accenture on Friday. And that's even reaching because it's not going to be market moving. Might move IBM. That would be about it. So I guess Lennar tonight. Maybe that's the biggest name with the home builders. But we've seen home builder earnings here so many times. They come out and they're good. And then they lift like 3-4%. And then by the pre-market, they're starting to leak. And then by like 10 a.m., they've given it all back. I mean, it just seems like the show remains the same there with the home builders. They are just absolutely hated. They've been value traps here for a very long time. I mean, looking at the longer term chart of Lennar, this was $190 last year. We're $108 here now. And we know what? Because higher rates for longer. Like this is where we're at. The Fed has not lowered rates. If the Fed starts going into an actually lowering rate cycle where inflation is in check, the home builders probably start to lift again here. But as of this time, it's just a really tough environment for home builders when the rates have been higher for longer, and earnings have been okay. So I do think there's going to be a time and a place to buy home builders, and maybe that time's now. I mean, like give me, go to Lennar, Joel. You can look back to 2023. We had great support at 101, 102. It's kind of where we bounced out of. So I mean, if you have a long-term time horizon, you really can't go wrong with building homes because we always need new homes. But it's just been a tough environment with interest rates higher for longer.
Didn't Warren hop into a housing stock and then hop out like real quick?
He was in. Oh, which one was he in? He was in. Maybe the Brentster knows. He was in one for a bit. And he might still have one there in the background, but it's small. It's a small. The other thing is, tariffs is always a wild card here too. So I didn't mention that because obviously, lumber coming in, some from Canada. I mean, you've got to consider that there's tariff issues here too. So I think like it's almost a wait and see game for some of these two to see where tariffs are eventually going to land. Like I've argued, if we land 10% across the board on any country, like given country, it's probably applauded by the markets. But, when we're going to land higher on certain countries, it's going to not be applauded as much. But I mean, lumber is an issue. They do import a lot of lumber, some of these home builders too. And, a lot of other building materials as well. So that's, the other headwind there. So two headwinds. One, interest rates have been higher for longer. But two is just tariffs. We don't know where they're going to land. And that's going to definitely impact these home builders.
All right. Not only are we light on the earnings front, we're light on the econ data front as well. Tuesday, retail sales. Wednesday, Fed rate decision. Press along with the briefing. Weekly jobless claims are moved up. Thursday, everyone here gets the day off except for Dennis. Dennis has to work on Thursday. He'll be doing a show from 8 to 9 a.m.
Joel makes me work all the days. I have to work the U.S. holidays and I have to work the Canadian holidays just because I'm Canadian. He punishes
and then Friday, we don't have much, but let's go. Let's wrap things up here in the final 5 minutes of the show. And we got some ratings to cover here. What's your favorite rating?
Well, a couple interesting ones here, obviously with some Sarepta moves, but we've already covered that, and those are just chasing moves more than anything. One out of nowhere, and I like the ones that come out of nowhere, is this rating on Celsius Holdings here. TD Cowen upgrades Celsius to buy. They raise their price target up to $55. Just jumping into the note here a little bit, courtesy of Street Insider. Analyst comments: when we downgraded Celsius to hold in January, we were concerned the brand had lost momentum and gone X growth. Since then, Celsius scanner trends have improved to flat from HSD sales decline seen in February. We expect to see continued improvement through the summer as comps ease from plus 35% May to plus 19% in June and plus 11% in July. We believe management has course corrected execution on Celsius brand and marketing efforts like the recent live. So additionally, management recently said Kohrs Celsius brands gained 15 to 20% more shelf space during spring resets. So the energy category rebound more broadly has provided a positive backdrop. So positive commentary here. Stock is trading up substantially here because when you get these analyst ratings out of the blue on a smaller company, it will move price up 5.52%. I've said this a while ago. I think the Celsius bottom is in. It kind of went from growth stock to where it got down. When it got down to $21, it was had moved to value stock territory there, with the upside of some potential growth coming back here. Now we've moved, and we're at 43, and we're trading 60 times back earnings. We were only trading 27 times earnings when the stock was at 20. So now it's kind of moved back into okay, it's getting to be expensive here again. But you can't argue with the chart. It's starting to show some life. Give us some technicals on CELH.
There's one number only. Last week's high.
I like one number.
44 even. Haven't hit that yet in the pre-market. If you're looking for 50, first you got to clear 44 and establish a bid at 44. Top of yesterday's range, 41.72.
Coreweave downgraded at Bank of America on valuation. The reason I mention this is because this stock has been the hottest stock here, if not one of the hottest stocks here in the market. Obviously, it's over doubled in the last 3 weeks. So they think it's too far, too fast. They have a price target of $185. So they're raising their price target up. So it's not totally just a bearish note here. It's just to neutral. They do raise the price target. However, with the stock trading 25 times a premium to the CY 2027 EBITDA, so looking out 3 years to even get that number, believe much of the upside's already priced in. So that's where they're at on Coreweave, CRWV. Where is Joel Elconin on the technicals?
Oh, man, you talk about layup for technicals on this one. Oh, man, double top at 154.50. For you, actually, I don't 154.80, 154.50. That's your super extra major resistance. Great number on the downside. You bulls out here, you don't have nothing to worry about. Well, this is not financial advice, but you got a double bottom here at 142.50. Bulls firmly, that's $7 away. What do you have to worry about? So that's a great number on the downside. That's a clean as double bottom as you've seen in this. Look when it did a double bottom at the end of May. Boom, what it did. So easy peasy with the numbers on Coreweave.
Closing market thoughts here. We are leaking still on oil, so that trade, probably became a little bit crowded Sunday night, and it's coming off pretty substantially here this morning. I was worried about the defense stocks. I said at the start of the show at 8 a.m. with oil leaking, I'd be concerned about the defense stocks. A lot of them are still trading slightly higher. They have now turned to the red as well. Lockheed Martin is now down 1.5%. General Dynamics. NOC has went from 520 to 510. So we are leaking here too. Oil is your leader on these stocks. AVAV has leaked away its gains as well. So we're still a little bit of the Steve Miller take the money and run type of market.
Yeah, I could give some more detailed numbers on STN, but right now, important to get through that pre-market high is 60.77 and a quarter. Real quick, tune in tomorrow, 8:45 is when Tim likes to come on. Tim Seymour Asset Management, joining us here on Pre-Market Prep. Synthetic Tuesday here on Pre-Market Prep. Everyone have a good day.